Пацаны! Нормально! Вон он, сука! Капец тебе сложно.
Just a quick disclaimer, anything in this video should not be considered as financial. Accumulate good quality cryptos during these periods in time will be rewarded the most when the hype picks back up. So that's just my overall thoughts of the market right now. Let's take a look at some update points. The first thing that I want to take a look at is just how the market is feeling today and the overall sentiment in the market. And to do that, we're just going to take a look at funding. So here we are in coinalyze.com, and you can see I have the chart of Bitcoin up, and I've also got the funding rates. You can see I have the 12-hour time frame up, and if we go and zoom in right here, you can see these red bars popping up. That is the funding rate turning negative, and what that indicates is that there are shorts in the market. And you can see right here that previously we had quite a big dump in the market. We had quite a large downtrend going on, and it was kind of confusing that there weren't any shorts being shown in the funding rates. And that was kind of perplexing, and it kind of just showed that we'll probably have to go down even more to kind of cause more pain in the market to make these shorts kind of show up right here. Now, why are we looking for shorts? Well, typically when quite a lot of shorts and a lot of funding turns negative, so it represents a lot of shorts kind of piling in, that can typically act as fuel for a short squeeze when those people kind of get liquidated, and it causes some sort of cascade and one big squeeze, and that can really foster violent price increases and decreases as well when the funding rates are to the upside for a prolonged period in time. And some examples of these negative funding rates and some, the price kind of moving up very violently after a prolonged regime of negative funding include examples like this. For example, you can see this part right here in September, we got a bit of negative funding at the end of this correction right here, and then that fueled further price increases. You can see right here the most predominant one happened right here in June, July, and in May, June, and July, when we actually bottomed out initially right here. And then you can see, because the sentiment in the market was so bad, there was a lot of fear in the market. More and more shorts kind of just started to pile on and pile on. And you know what happens in the market when everybody thinks one thing, typically the market just goes the other way. And you can see that is exactly what happened here. Everyone here, just a lot of people were shorting. Funding was, negative for a prolonged period in time. And then you can see the boat kind of swings the other way, and those people kind of get liquidated. You get a big short squeeze, and the price violently moves in the opposite direction. And you can see that happened here as well twice, where we got lots of positive funding, too many people going long right here, and then boom, goes to the other side. Same thing that happened here. Too much positive funding, goes boom to the other side. All right, so moving on to the next point, it says that we are bouncing off of the POC, but approaching pretty key levels of resistance. And so this is just going to take a look at some short-term price action. And what we see right here is actually, let me just go and bring up our volume profile indicator right here. And what we'll be able to see is the volume being shown on the left-hand side. side. And what we can see is quite a lot of volume. So it indicates there's quite a lot of interest in this area below $40,000. And that interest kind of peaks here at around the $34,000 level, $34,193. That's where the POC is, or the point of control, the area of most interest and volume. And you can see right here that we've actually bounced off of 34,000, just about $34,000. You can see it actually went down a little bit lower to about $33,000, but then it kind of reclaimed that, and now it's kind of moving upwards once again. However, that being said, we do have quite a lot of resistances above us. We have, the 20 daily EMA at $39,000. We have the 50 daily EMA at around $43,000. We've got the 200 moving average at about $48,000. And then we've also got, this area right here that we need to watch out for, because there's quite a lot of volume in that area. And so if these people are kind of underwater right now, if the price was to come back up there, these guys might most likely, sell at break even, and that could create resistance and a lower high. Not only that, but if we take a look at the weekly time frame, you can see that, we also have the 50 EMA and the 20 EMA on the weekly time frame sitting here as well. So there's a lot of resistances above us, and you can see the prices that those are sitting at are currently 44,000 for the 50 weekly EMA and about 46,000 for the 20 weekly EMA. And so that just shows, that's why my thesis says that I think Bitcoin has a lot of work to do, and it needs to get through all of those. And it will need a lot of volume to get through all of those. And what we're seeing right now is actually very, very low volume. So you can see right here, the volume is quite low. And so it needs a lot of power to get above there. And so here are just some rough sketches of, some possible routes that we could take. We drew these out a few weeks ago, and these are just all different kind of possibilities. They're not very neatly drawn out or anything, but you can see right here, one option is, getting rejected at the weekly, at the daily EMAs, going lower down to the range lows at about $30,000 or the high 20s, which is why I said potentially we could bottom out around there. Or you can see right here, that blue one kind of got invalidated. That was the one that saw us potentially going lower, like straight away and just no demand stepping in. But that one that's not the case anymore. We did see a bit of demand stepping in, and you can see that we're actually, approaching this yellow kind of schematic right here, just kind of getting to those EMAs. We also have another option right here where, a bit of demand actually steps in and potentially pushes us up above the EMAs on the daily time frame, but overall kind of gets rejected at around this level right here, creating a lower high. And this could be some sort of bull trap or something like that. And that is because, all of the resistances that we previously talked about, things like, that volume profile spike. So that volume spike right there, which is sitting at around, $48,000. We also have the 200 daily moving average there sitting at about $48,000 as well. We have the 0.5 Fibonacci level sitting at about $48,000 as well. We have the weekly 20 EMA also sitting at about $48,000. And so $48,000 is a pretty key level of resistance, but also if we are to experience, that short-term relief rally that we talked about, that we haven't seen just yet, because the price has literally just been going down only, no relief rallies whatsoever, no lower highs being created. It would make sense to have some sort of relief rally, having a bit of mean reversion, and then potentially getting rejected off of there to find another bottom later on. And so that's just some short-term, potential price action that we could see. All right, so now that we've taken a look at some short-term price action, the next thing that I want to do is just zoom out a little bit and take a look at 2019 and 2020, which is kind of this big move and then a kind of sideways kind of range right here, versus 2021 and 2022, which is also another big move and then kind of a sideways range as well. And so I just want to compare those 2 points in time, because I think, in the past, I've compared a lot of cycles. You probably watched a lot of other people comparing cycles as well, different cycles and different bull markets. But I think that maybe a better comparison might be comparing, this first wave right here and then this second wave right here, because, they're quite close to one another. The environments are quite similar versus the environments of 2017 and 2013. And so, this is just another thought experiment. So the first thing that I want to take a look at here is in 2019 and 2020, you can see quite a large impulsive wave getting quite over deviated away from the 200 daily moving average right there. You can then see it falls down below. You have a bit of mean reversion and it falls down below. And then it gets back above, falls down below, and that's the C19 Black Swan right there. You can then see it gets back above and then starts working its way back up to the range highs. And that's kind of that sequence right there. Now, what's really interesting is if you take a look at the 2021 and 2022 range, it kind of looks quite similar with this clear overextension with a lot of euphoria in the market right here. And you can see it's obviously very overextended. And then you can see those signs of weakness. It starts falling down below the 200 daily moving average and has a bit of mean reversion right there, but falls down below it. And you can see that's kind of similar to what we saw here, going down below the 200 daily moving average, gets back above, and you can see that kind of gets back above as well, falls down below once more, and that was kind of another black swan. So this black swan right here was caused by C19. But this black swan right here was kind of caused by the Fed rate hikes, as well as, a bit of talk about, reducing liquidity and potential and the taper as well as, potential war breaking out in Russia and Ukraine. And that black swan kind of happened at the same time, relatively speaking, that C19 happened in this kind of sideways accumulation range. All right, so that's taking a look at 2019 and 2020 versus 2021 and 2022 from the perspective of the 200 daily moving average and just on the candlesticks themselves and the price action. But what about on an oscillator like the TDI, which is a combination of the RSI, Bollinger Bands, and the moving averages? And what we can see right here, the clear way to read this, the simple way to read this is you can see that green band down there that I've highlighted. That has kind of marked points in time where the price of Bitcoin has historically been quite oversold and where it's been a pretty good point to buy at. And you can see right here, and it also marks out points where we've reversed as well. And you can see, this first part back here, if I go and take a look at this, you can see this was in 2018 at the bottom of the bear market of 2018. You can then see, once we reach that point of around 11% on the TDI, this is on the daily time frame, by the way, you can see we got that pretty large impulsive wave. So pretty big impulsive wave, and it kind of represents it right there. You can then see we kind of reached this point right here. And that was another point where we went underneath about just underneath 23% right there. So it got pretty oversold. And once it reached that point, you can then see right here that it kind of fell down a bit lower, but you can see a bullish divergence kind of coming into play right there. If I go and zoom in, you'll see the bullish divergence kind of coming into play. So you can see these lower lows coming in on the price. And if I go and show you right there, so you can see those lower lows in the price, but you can see these higher lows in the TDI right here. And so it looks like a bit of a bullish divergence. So even though it did go lower, it kind of got close to timing the bottom right there. And then you can see another impulsive wave to get it back above the 200 daily moving average. And then it falls down below for the C19 kind of black swan right there. It gets oversold once again into that green kind of band right there underneath around 23%. And then you see the next large impulsive wave, and it doesn't get down back to these oversold levels until literally the May correction. So it seems like big corrections, big macro corrections cause the TDI and the daily time frame to get into these into this oversold territory. And you can see then after we got into that oversold territory, we got another big bounce right here. And then you can see now we're back there once again. So if previously this level on the TDI has marked bottoms, then, basically, it looks like we're pretty much bottomed out right now as well. And so we could head lower, but what you might see there is something similar to what we saw in 2019, where you start to see a bullish divergence occurring. So it could go lower, a little bit lower, but that could create a bullish divergence. And so that's what I'm taking a look at with also the TDI laid on top. All right, so now that we've taken a look at that kind of price action, we've taken a look at a few fractals, let's go take a look at the dormancy flow, which might be able to provide further confluence as to whether we are approaching a bottom or not. So before we go into the Bitcoin dormancy flow indicator, I just want to take a look at this article that was written by David Puel that explains what that indicator actually is. Because you probably have seen, the dormancy flow chart flowing around a few different places, and you may be wondering what it actually is. And it basically just represents the number of days each coin, the age of the coins that were transacted on the network. And so the higher the dormancy value, the older the coins are that were being transacted, aka the more old hands are releasing their Bitcoin into circulation. And so you can see right here, the dormancy flow attempts to describe the state of what smart money is doing in the market at any given time, whether they're accumulating or whether they are distributing. And so what does accumulation mean? Well, accumulation describes the act of smart money or last resort buyers taking cheap coins from dumb money. That's what accumulation means. It means that the smart guys taking the coins from the dumb guys. While distribution, on the other hand, describes the act of smart money giving their coins, their more expensive coins, into the hands of the dumb money, aka the bag holders. And so accumulation typically occurs at the market bottoms and distribution occurs at the market tops. And so if you can identify whether accumulation is occurring, then you might be able to identify the market bottom. And if you can identify that distribution is occurring, then you might be able to identify a market top. And so you can see high destruction is bearish. It means that old smart holders are releasing their coins into circulation, and low destruction is neutral. It implies holders are maintaining their position. However, it doesn't necessarily mean that new buyers are coming in. It basically just means that potentially the long-term holders are setting a floor. They're not selling their coins, they're just neutral. And so that's also helpful for identifying market bottoms. And it also says here, dormancy integrates all these narratives into a single metric, whether it be destruction, volume, and that creates dormancy. And you can see high dormancy is bearish and low dormancy is bullish. So now that we kind of know what dormancy represents, let's go take a look at the chart. So you can see right here, this is the Bitcoin entity adjusted dormancy flow chart. And basically, what did we say before? With lower dormancy was bullish, higher dormancy was bearish. And so what we can see is an example right here in around 2011, just before 2012, we can see the dormancy flow is very, very low. And that just means that there weren't a lot of old hands selling. There was accumulation occurring. And you can see the floor was set because of how low the dormancy value was. And if we take a look at the next one, this happened at the bottom of the 2015 bear market. It also got very, very low relative to the previous cycle right there. And that allowed us to identify that this was a low value right here for dormancy. It meant that the long-term holders, the smart hands, weren't selling. We can also see right here that in 2019 or 2018, when we had the final capitulation, you can see we also reached a similar dormancy reading. And now it seems that we're also about to reach a similar reading to these basically bear market bottom readings, which gives me a lot of conviction to show that we're pretty much, close to the bottom of this correction, which actually resembles the bottom of a bear market. And yes, there could be some more downside. There might be one last violent move to the downside, one last capitulation that is still on the table. However, that's why I think that we are closer to the bottom of a bear market than we are to the start of a bear market or to the end of a bull market, or I just think that the bottom is closer, and that's what the dormancy flow kind of supports. On the opposite hand, you can see right here, these are the times when you should be looking to sell. And these are the times when you should be looking at being bearish, is when the dormancy flow gets very, very high. For example, right here, this just showed, look at how many old hands, look at how much smart money was selling right here. Look at how much smart money was selling, around these points, and look at how much smart money was kind of selling at around these tops right here. So that's pretty much everything for Bitcoin. The last thing that I want to go over is just some food for thought. And I think this is great for putting it into perspective as to where we are sitting in the overall trajectory of Bitcoin. All right, so here we are in the BLX, and I've just gone and highlighted all of the different cycles that Bitcoin has had. And you can see right here that each of the cycles, although are similar, take on very different characteristics depending on what participants are in the market at that particular point in time. And what you can see right here is you can see the 2013 cycle, 2017 cycle, 2020 cycle, and then some potential cycles in the future. And if we go and bring up the logarithmic growth curves, you can see that each of those cycles is contained within the logarithmic growth curves, which kind of gives us a little bit of a guide. And if I go and then just go and remove that, let's go and take a look at the first cycle, which right here is just about here. Now, also what you'll notice is kind of just these quotes at the top. This is a quote from Mahatma Gandhi, and it says, first they ignore you, then they laugh at you, then they fight you, and then you win. And I think that, is really good for kind of describing Bitcoin's current path. First in the first cycle in 2013, I think this was the first cycle actually, but this is the one that everyone puts in their comparisons. You can see during this 2013 cycle, a lot of people just kind of ignored Bitcoin, and people didn't really pay much attention to it. And it was probably just because it was very, very new. Not really many people knew how to get it. And you can see right here, its behavior is just like really quick bursts of energy, and it's very jagged and it's very aggressive, representing, quick boom and busts within the cycle. It's kind of like one big game of musical chairs. Not really many people know where this is going, and it's kind of just like, quick dumps and quick pumps, and overall just very, very jagged. And that's kind of the first cycle. And that was mostly because the people in the market were just a bunch of, a lot of the first adopters, a lot of the, just pretty much a lot of speculators, just a few people who were just in the market at that point in time. And then you can see in the next cycle, this is kind of where things get really crazy right here. A lot of people get into crypto in 2017. And this is the point in time where you see, another cycle, but it just takes on a bit of a different structure, and it's a bit more of a sustained energy burst right here. It's much more of a sustained parabola right there, and it suggests more confidence since the last cycle. So maybe people have seen what happened in the last cycle, and they expect it to go to a certain point in time, and they kind of, there's a bit of predictability in this and a bit more confidence, and so people are willing to kind of just hold here and kind of just ride it up to the ultimate blow off top right there. And most of this was driven by retail. So there wasn't very many, or if any, institutions at that point in time. And so this is kind of what it looks like when a lot of retail get in. It's a very just steady parabola, boom, 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 blow off top, massive dump in the market, massive bear market afterwards, because it got so heated in the market. And then what we see is another cycle in 2020, but it's a little bit different this time. And it's because the entrants in this one, are still people, a lot of retail from back here as well, a lot of new retail as well. But in this cycle, we have the presence of institutions and even El Salvador as well. And so, this right here, mark the entrance of these bigger players. And these bigger players don't really act like this. They don't just FOMO in like that, and they don't really cause huge blow off tops. Even though we did get, some sort of a very overheated part right here in the market, where Bitcoin went to, 65,000 back in around at the start of 2021. Even though we got that, what we see with the overall kind of structure of this cycle isn't like the previous two. In fact, the first one was just very quick, boom, burst up, boom, burst up, boom, burst up. And what we have here is a sustained parabola. parabola. But what we see in Bitcoin's cycle of 2020 is very, very long pauses that are controlled. They're methodical. They prevent exhaustion, and unlike the previous cycles. And overall, they go through these kind of reaccumulation phases after large uptrends. So you can see large impulsive wave, accumulate, large impulsive wave, reaccumulate. And these accumulation parts, we've covered it before. And, Richard Wyckoff theorized that these reaccumulations serve the purpose of switching coins or stocks or shares from dumb money to the smart money. That's the whole point of an accumulation. And they are basically points in time where smart money is able to just get more as much as possible and bore as many people as possible, scare as many people as possible in a sideways trading range, and so that they can accumulate more. And that is the whole point of a reaccumulation. And if it's also kind of a point in time where institutions kind of get in and big players get in, then it kind of makes sense as to why this price action looks like this. And so overall, if we bring up the logarithmic growth curves again, this potential cycle could kind of just go sideways, and range until it reaches, this point in time where it kind of gets squeezed and then pops back up. And it's kind of similar to what we saw in 2020, where it kind of got up, it had a huge impulsive wave, accumulate for a long period in time, and then it gets to the bottom of the logarithmic growth curves, and then it kind of just boom goes back up. And that may be what we see. Maybe that is what we see for Bitcoin. And then after that, you can see, potentially the next few cycles, or the next cycle, the next kind of part for Bitcoin is, the part where it becomes mass adopted and everyone's using Bitcoin, and, it's steady uptrend, lower volatility, constant demand, and it's not very much like the